Hello and welcome. This is Camilo. I comment on matters finance, investment, the economy, and everything in between to help individuals make better economic decisions. The other day, I was hosting a live event on this channel, which was focusing on how an individual can conduct due diligence on money market funds. Though we didn't get to finish on that due to technical issues. And the purpose of this video is to look on the most important bit, which was the conducting the due diligence itself. If you want an introduction on emergency funds, you can view the video that I had created previously on the live event, which is on the channel. Let's just dig direct to today's business, which is due diligence on money market funds. For those who are new to the money market fund business in Kenya, it is good to know that we have had a couple of mishaps with money market funds, where on one case, investors have failed to conduct due diligence investing in non-regulated funds, all where the regulator, the Capital Markets Authority, have failed to keep up with this business of regulating these funds, all where the fund managers have failed to conduct their business in good faith of protecting investors' funds. And it then makes sense for an investor to watch their back, in simple terms, where an investor conduct due diligence and knows the fund itself, the company offering it, and where the assets are located, so that they can ensure that their funds will be safe. Let's just dig directly on what you can look out when you are going for money market funds. I will share a presentation that I had prepared for us here, and then we'll see how this goes. So we are talking about conducting due diligence on money market funds. And in summary, what you'll be looking for is you want to ask yourself, where you are putting your money, is this a duly registered company, and are they adhering to the regulations? So if you find an invitation to invest, maybe on social media or in the news, you want to know the company behind. Is it registered? Who are the regulators? Even be it a money market fund or a circle or any other type of investment, you want to be dealing with a duly registered company, and also, if possible, if it is adhering to the regulations. We'll be looking at that in respect to money market funds. You also want to know, when it comes to business of unit trusts, you can find a regulated fund and an unregulated fund. So you want to be sure whether the fund you are dealing with is regulated, that is, it is under the Capital Markets Authority, or it is an unregulated. And where you find yourself dealing with an unregulated fund, you on your own make these risky decisions, knowing that you might not have reprieve from any regulatory body. Then you want to look at fund prospectus. You will also look at the asset allocation of this fund. You would also want to be interested to looking at the past performance of the fund, and which we'll be looking into detail. Then you can look at the market share, and we'll see where you can get this data to help you do this, compare the market share of these different funds. You also want to ask yourself what is in the news. We'll be seeing with an example. And then there's reviews of customers or people who have used this product or fund in the past. The first part would be when we are looking at whether the fund is duly registered and adhering to regulations. The business of unit trusts and money market funds is regulated by the Capital Markets Authority. And the regulations require that no one will offer an invitation for investors to invest funds without first getting a license from the Capital Markets Authority. And by the time they get a license, there are a couple of requirements that they should adhere to. So your business is making sure that the company you are dealing with is duly registered, and you can check whether they are listed in the Capital Markets Authority website. You also want to check whether they are making reporting, that is preparing the accounts and any other reporting that they should make, and other disclosures. And these disclosures published in their website, where you can have easy access, or in the registered office. When you walk to maybe a fund manager in the registered office, you should be able to see these, we should be able to have access to see these financial statements and other disclosures that these fund managers are expected to keep by the regulations governing the business or the industry. I have always insisted that if you are an investor, you are going for any type of investment, be it real estate or shares or bonds or unit trusts, or that is real estate income trusts, rates, or any other type of form of investment, it is important to get some background, get yourself educated. And when you go for any type of investment, there are regulations governing that investment. And then it is important to know the regulations. And from these regulations, you can know what is expected of you, what is expected of the fund manager, and what is expected of the regulator. I can highlight one regulation, money market funds, which you will always be watching whether the fund manager is adhering to, is there's a guidance on the composition of money market fund, which require that the fund manager invests only in interest earning money market instruments, which have a maximum weighted average tenure of 13 months. So there is a guideline to fund managers on where they can invest the investors' funds that they have, where they can allocate these funds. And the regulations, one of the regulations that is guidance 26A, is that the fund manager can only invest in money market instruments that have a weighted average tenure. The period should be 13 months. These can include commercial papers, they can include treasury bills, they can include government security, call deposits, certificate of deposit, and any other like instruments as specified by CBK from time to time. So if you find a fund manager who has invested the assets under management, that is AUM, in securities that have tenures of more than 13 months, they are going against the regulations. And then there is the list of assets that the fund manager can invest in. When you find a fund manager going outside these asset classes as prescribed, these money market instruments as prescribed by the regulations, then this is a fund manager going against the regulations. And then the question would be, why is the fund manager doing this? And let's take an example. NCBA, they have a unit trust, which is registered and has different funds and the same. One of the fund, which is NCBA Money Market Fund, thought that all came to a conclusion that adhering to the guidance that I just gave an example of, that is having assets with a tenure of less than that of 13 months or less, would not really work well with the goal or prospects or whatever they want to achieve for the investors. And they were very open about this, and they sent a circular to investors informing them that they have challenges adhering to guidance 2, number 6, of the guidance for collective investment schemes on valuation, investment performance measurement, reporting, and other matters. This is just this is the guidance that I just highlighted. And in this circular, the fund manager is informing unit holders that adhering to this guidance would mean the investors, they might not guarantee investors high returns, because most of these instruments which have the period of a tenure of less than 13 months, they don't have a high interest rate. So the fund manager then is telling the investors that they have raised this issue with the Capital Markets Authority, and they have requested for a change in the name of the fund, now which was being called the NCBA Money Market Fund, and it is the new name is the NCBA Fixed Income Fund. Now this allows them to hold maybe instruments with a tenure of more than 13 months. And for an investor, this is good, where you are always on the know what is happening with your fund manager, and fund manager also keeping you updated on what they are doing in regards to adhering to the regulations that are set. Let's talk about the second thing you'll be looking out for, which is you want to ask yourself whether this investment or fund I'm going for, is it regulated or is it unregulated? In Kenya, there are regulated and non-regulated investments, and the regulated funds are controlled by the Capital Markets Authority, and the objective is to protect investors' interest. So the capital markets is there to protect investors' interest, to investors who are investing with the different funds. So there is this regulatory framework which guides this business of raising money from investors, and where the fund manager is investing this money to guarantee security of investors' money. And the players or the fund managers get licensed when they adhere to these regulations. And where a fund manager is going against these regulations, they get their license cancelled. And there are also measures that the Capital Markets Authority can take, which include fining the fund manager, or also barring a fund manager from holding an executive position in any other business which is under the Capital Market Authority. And now the law prohibits any person from dealing with an investment market product without a license from the authority. So you cannot just, someone can't wake up and go market investment products to investors without a license. If this happens, then we are talking about that investment being unregulated. And the unregulated market products, they are not under provision of or control of any regulatory body. And the capital markets, securities, public offering, listing, and disclosures, the regulations of 2002, which is the main law governing these kind of investments on governing the issuance of securities to the public, is not applicable to private offers. So when you are going for an unregulated fund, this is what the regulation terms as private offers. And so we have already said that it is against the law for someone to go to the public without a license. Now, crowdfunding or putting investors' money together to invest in something else. And these private offers, they are not, it is not like they don't exist. They exist, but they are not to be marketed out there. They are closed shop, they are closed offers, and majority of those that have come out to the public, they are just meant to be marketed to a group of investors. Though the regulations have a gap because one would get these kind of offers in social media or the mainstream media. We have had such kind of issues in the mainstream media where they are advertising investment products which are not regulated. And now it is the investor, now the purpose of this due diligence it is the investor to know that when I'm going for an investment product, I should first inquire or get to know whether it is regulated or unregulated. And when you are going for the unregulated investment products, just know that you don't have the capital markets authority is not watching whatever you are doing. And when this happens, we just say you are on your own. If you lose your funds, there's nothing much you can do in regards to that. It will be good to give an example at this point. We have had a unit trust, which is registered with different funds under it. And one fund was regular, one fund was unregulated. They have several funds regulated, and one of the funds was unregulated. Investors went for this unregulated fund, and they lost their money, or this fund manager or the fund in question was experiencing some issues, and investors who wanted to liquidate their investment, they couldn't do that. There are court cases, so we would limit ourselves to what we can say, lest we get cited for the same. But basically, for these investors, the first question before investing in this fund with this fund manager on the specific unregulated fund would have been, is this fund regulated or unregulated? And when you have this in mind, then you know the kind of exposure you would go for. There are some people who have a higher risk appetite, and now the promise of a higher rate of return will make them want to go into these unregulated funds. But you also know that with the higher returns, you are more exposed, and there are more risk associated with that. The guiding principle when it comes to this is don't put all your eggs in one basket. Just be sure to, if you all your assets or what you are investing, the money you have set aside to invest, if it is around 1M, you can just say 5% of my disposable income that I can invest. 5% would go to these high risk, high yielding investment options, even though they are unregulated. This cautions you that if anything would happen, you will just lose 5% of your cash. But we have had people investing fortunes, the retirement benefits, or everything that is under them or under their name being invested in these unregulated funds. And for a lack of a better word, we can only term these as greed. You want to make it within a short time, you find people selling the assets, other assets, and going to an investment just on the promise of a high return. You want to be safe. But when you are going for high return, just know that also there are risks, high risk associated with the same. Then on that, private offers are prohibited from being publicly advertised, but we always find these will not always be implemented or be followed up upon. And this will always expose investors. And I've already said that the regulations have a gap there. When the capital markets had invited members of the public and stakeholders to when they were updating these regulations, this was one of my key concerns when contributing to these regulations, that these private offers will always reach the public through social media or any other platform, and then but nothing much came out of that. So it would then make sense for an investor to watch their back, and that is what we are doing here. And then how would you know that the fund is regulated? Now, what you want to ask for is a fund fact sheet or la prospectus. And in the prospectus, this information will be listed there. You want to ask the company offering whether whatever they are offering is regulated. And when you get this information, it is also good to follow up with the Capital Markets Authority. It is your money. You can save a million shillings by making a couple of phone calls which won't cost you more than 100 shillings, asking even the regulator whether the fund or in question is regulated by them. This is a fund fact sheet, and they are saying the asset classes that they will invest in, the taxation, regulation bit, suitability, the charges, and any other detail that an investor might be interested in. I just screenshotted part of this to show that part of regulated and they say, yes, it is regulated by the Capital Markets Authority. But though I would go ahead to ask the regulator, whether this fund is really regulated. From there, I had mentioned you would ask for a fund fact sheet where you find everything in regards to the fund. And I've taken an example of the CIC money market fund, and everything you need to know about the fund that you are investing in will be contained in this fund fact sheet. They will show you the past performance. They will show you the asset allocation, how they allocate the assets. And this information is easy to get because I can show this with an example. What you want to go is you want to go to the specific, you can go to the website of the specific fund manager or the company. And what you, now I'm on the CIC website, and then the part of the money market fund, and they have fact sheets, a couple of them. So you can actually opt to download the report, and they tell you a couple of things: who is the fund manager, where when this was launched, the risk profile, the trustee, who is the custodian, would appreciate if you are going to this business of money market funds, then brief yourself on the regulations and the parties to this business so that you can know the role of trustee, the custodian, the auditor. And going ahead with the fund fact sheet, um, they are saying the minimum investment. You can invest in the fund, additional amount, whether they are fees, the annual management fee, and there's guidance there on the effective annual yield. When you invest for a year, what would you earn? So this is just a guidance of money market funds will always advertise their daily yield in the newspapers. You can brief yourself and see which money market fund is giving better returns. Though this should not be the basis of choosing a money market fund. Returns, yes, but there are also other factors that you should consider, like the ones I'm discussing here and have discussed, so that you returns, when you go chasing high returns, you can find yourself losing your money on the basis of that. So then they will say the distribution, they'll give you all the information why you should invest and everything. I'm interested on this part of the fund performance over the years. You can see how they are performing or what their yield, whatever they are giving, and they compare that with treasury bill, that is a 91-day treasury bill. Then there is another bit of information there, which is the asset allocation, and you can always see where the funds are allocated. Like a large bit of the money, which is around 56.29 percentage points, is invested in fixed deposits. And there's treasury bills at 33.05. You'll also get treasury bonds at 7.38. There's cash and net settlement at 2.5. They have that should be it on whatever they have, where they have allocated their funds. The asset allocation will be suitable in informing you. I'll be saying this in length. Will be suitable to tell you more information on how liquid this fund manager is, the asset classes they have invested in. Will also tell you how exposed they are. We'll be looking at this on a larger perspective, but whatever CIC have invested in will tell you that they won't have problems with the liquidity issue. If you want to check out how they have the asset classes they have invested in, if you want to check out, you can actually do so without much hassles. Because fixed deposit, they just need to talk with where they have these accounts, and they can get the money all part if you are withdrawing. So you the fund manager is doing a great job at CIC. So basically, if you want to get that kind of information, you would now have to check, maybe you are considering another fund manager. You can go to the specific fund manager on their website and be able to check for this fund fact sheet. We have said that anyone who you are investing your money in should be able to make information easy to access, just as we have done here. You don't need to go to length asking for information. It should be made very easy to access, and one of the easiest way to do that is through the website or through the registered office. Then we will go on um, to what to our presentation, and we have looked at the fund fact sheet and what it can be able to help you with. Now, this part I had promised to look at in length, that is asset allocation. You can get this, we have seen this from a prospectus by CIC, or you can get this from the financial statements. And I have a financial statement here by the NCBA, and this is the NCBA Money Market Fund. This was before the naming or the renaming. And when you have a financial statement as such, what you'll be looking for now in regards to whatever I'm talking about, that is the asset allocation, you want to go to the statement of financial position, or what people call as a balance sheet. And you want to go to the assets. And now here, going by the statement by NCBA Money Market Fund, you at the under assets, we have investment balances. And this is under note 9, number 1, which is 10.9. And now, you don't stop there, because for those without accounting basics or background, is the notes will elaborate more on what is there, that is the investment balances. So you want to go to now these, you want to go to the notes to the financial statements. So then that should be note 9.1. And I have note 9.1 here, where we are talking about the asset allocation. That is the investment balances. What investment do they have, and where have they allocated these investments? And they have deposit with financial institutions. They have treasury bonds and bills, though which is not separated. But on the fund fact sheet, this should be easily put there. And then they have corporate bonds at fair value. So when you find the statement, what you want to look at is we are asking ourselves questions to do with the exposure of the asset classes that this fund manager has invested in. Which are more risky, and how much, what percentage of the asset allocation have they done to this? So what you would do when you are conducting this due diligence is taking, for example, take a vote header such as corporate bonds, which is at around 290 M. These over the total, then you multiply by 100, and you'll see what percentage of the assets under management is under corporate bonds. In the 3 categories that they have allocated the AUM, that is assets under management. We have corporate bonds brings in more risks, because now here companies which are forward bonds, and the fund manager here has invested in those bonds. So where you have a very high percentage of AUM, assets under management, being allocated to asset classes which have more exposure. We'll talk about this in length when we'll talk about corporate bonds. And why we would say that corporate bonds have more exposure is because majority of the corporate bonds being offered in the Kenyan market, they are coming as unsecured. So if anything went wrong, then the company wouldn't pay the holders of these bonds. So what we are saying is, you don't want to go for a fund manager who has invested a large portion of the assets under management in asset classes which bring more exposure. We'll be looking at this in length when we go to the CMA report. I will have a report by CMA which we'll be looking at. Then, and it is here, that is asset allocation in percentage. And we have a couple of fund managers. These are money market funds. The CIC money market fund. There is the ICA, Lion money market fund, and all these money market fund. And then we have the vote heads, or where they have allocated the funds, and are the assets under management. And we have this is cash and demand deposits. There is fixed deposits, listed securities. Here we are talking about shares and such. We are talking about government securities. We are talking about the law allows, the regulations allows a fund manager to invest in another collective investment schemes. So you'll find the fund manager investing in other secure collective investment schemes. There is unlisted securities, and then there is offshore investment. These are options that the fund, the money market funds under review here. Some that have invested in. So now let's just look first at the asset classes. And when you hear maybe something like offshore investments or unlisted securities, the exposure that comes with, for example, unlisted securities wouldn't compare with the exposure from government securities. So a fund manager will have to be prudent in the assets, how they are allocating the assets in such a way that the fund is not so much exposed. The fund, you need to secure the funds of the investors. And you as an investor, when you are going for a money market fund from the many that exist, you will find what you want to look at is this, and you're asking yourself, am I more exposed, or is this fund manager more exposed, or are they prudently investing the assets under management? And this schedule, the source is the capital markets, the quarterly reports. This is where I've been able to analyze this. And now, without going so much into the details, but like an asset manager who has a large portion of the investment in government securities, what they are saying is they don't want the exposure that comes with other forms of asset classes. And they have put more of that on the same. We had looked at CIC, who have allocated a large portion in fixed deposits, and also around 40% or 40.5% of the assets under management in government securities. You can have a look on the other money market funds and be able, this should only be able to guide you on how the fund specific manager has allocated the assets under management. We look at past performance. So we just saw the fund fact sheet by CIC, and we are looking at in the past years, how was this fund manager performing? Though there is something else you would want to look at, these are the financial statements, and we have said you can get this from the website of the company offering the fund management services. And what you want to compare is maybe take an example of the total assets, the growth or decline of the same in in 3 years or in 4 years that have passed, how has this how have they been faring? So this is something you can look at. You can also look at their profits. They are in business, they are making profits. If you find a fund manager making losses year after year, then this wouldn't augur very well. This is not a very good picture. So what you want to look at is the profits that they have reported in 3 years or in 4 years. This will depend on how on the documents you can get. So you want to analyze the financial statement and you want to look at a trend in growth of the assets, probably in profitability. Actually, this comes out very well in some other classes we'll be having on due diligence on investing in shares. Now, this is where it comes out very well, and we'll be having more examples on the same in coming days. Learning is a continuous process. Before we go to the next slide, well, let me get some water. Now, let's talk about market share. So, when we have talked about market share, well, like just take an example in the telecommunication business. Safaricom is holding a large percentage of the market share in the telco business in Kenya, and what you are looking at is why who are other investors choosing, and why are they choosing the fund manager? Sorry. So we are asking on regards to this, why are the market other investors in the market choosing a specific fund manager or a specific company, and why are they choosing that fund manager? Where you have a large portion of investors going for a specific company or choosing a specific fund manager, it would maybe be a guidance on the trust that the market has on the specific fund manager. Secondly, there is also the growth of market share. But we talk about new money and old money. The fund manager would have been chosen in the years, but also the growth of the market share will tell you that people are gaining faith. The market is gaining faith in the fund manager or the company and the review. So this is a report by the regulator, that is Capital Markets Authority. It can act as a guidance, or it can act as a source of information for the same. And this is the size of scheme based on assets under management as at June 30th, 2022. And the company with the largest market share is CIC, followed by NCBA, then Britam. And they are listed there. You can find that. And then there is also the percentage change, what I was saying about change in the recent past. What has been happening in the recent past in regards to a fund manager. Now, with this information, it would really make sense to then do a background check where you find a fund manager grew by, let's say, a large portion, or like 10% or 15%. And you're asking yourself, is it a single investor who went for that? That is why they grew, or was it individual investors? Is this growth trend, or is there a trend in this growth? Also, you also want to ask, whoever has a decline in the assets under management, what is contributing to this? Now this is where you start doing a background check. You might be deciding to go for a fund manager whose assets under management are declining at a fast rate, and then it makes sense to ask, why are people exiting the fund manager or the scheme, the investment scheme? Then this would act as a guidance, because you don't want to, or you don't know what you're looking for. But with that kind of information, you'll look at a fund manager who is declining, and then finding the reasons of this decline. And if you find something is not really working well, then you would want to avoid. You will find a fund manager who is growing. Then you look for, you do a background check or do ask for some reviews, and then you can get maybe information like this fund manager is growing fast because they have cut the fee, the annual fee, management fee, or they have really worked along their processes. People are gaining confidence with them, and then you can choose them. So when you have this kind of information, number one, market share would tell you who people are trusting, but also the change would tell you um, what is happening, and this can be a good starting point to now look at the background of this fund manager. Of interest on this information, I would be interested, or maybe someone can look at this. ABSA unit trust scheme grew with 265. The percentage change in the market share grew by 265.01 percentage points. They had assets under management as at March 2021. They had assets under management at around 287 million. And then by June 2022, they had the assets under management at 1 billion. Then I would be interested to know what is the fund manager at ABSA doing, or someone considering them. They would also want to know where did this money come from? What is he doing differently? Is it investors warming up to him, liking him, maybe they're using that word, liking him? And then why is it, what is happening? Then we'll ask the other question, what is in the news, positive or negative reviews? And this source of information would come from the mainstream media, take for example, newspapers, also come from the internet. If you're following a person who talks about finances, you are in a group, social media group of people with interest in saving and investment, these are the sources of information. I've talked about this group I belong to, that is 52 Week Saving Challenge, and I contribute on these issues there. And I also find it is a good learning opportunity for me, where I find someone come ask a question. What is happening at company X? What is happening at fund manager BX? And then I find some responses, which then makes a guiding principle to be able to find, is this what is being said true or not true? And then what I want to see is whether it is positive or negative, and then I can form the basis of knowing what is happening with the fund manager, for example. So can give an example here on how you can use the internet to conduct this due diligence. I'll just go back to my browser, and then here I am, one of the fund managers in Kenya, that is Gegis Capital. I will just take that, and the usual web search is where I get all, but I've gone ahead to ask Google for the news, and here we are. So in the news, you will be able to read what is there in relation to the fund manager or with the specific company. And you can scroll down and read this information, and it will inform you, it will tell you where these, what has been in the news with this fund manager. So this information is there, it is publicly available. These are some of the resources you can utilize when you are conducting due diligence. I'll go back to the presentation, which should be coming to an end. Something to note there, a couple of these money market funds, they charge, they differ in their fund management fee, though majority of them charge 2% of the assets under management. So if you are putting in 100,000, 2% of that will go to fund management fee. And then this would make sense because you would have to look at the period you are investing. You don't want to put that money in today and withdraw tomorrow. It might not have got a new, you might lose money in the fund management fee. Simple. So it makes sense to also do this calculation. And second thing to note is the withholding tax on the interest earned is at 15%. And let me expound on the tax. Interest earned from a money market fund is categorized as qualifying interest. That is as per the Tax Laws Amendment Bill of 2020. Then qualifying interest, that is withholding tax on qualifying interest. The income tax says that the withholding tax on qualifying interest is final. So when we are filing your tax returns, if you have earned interest from a money market fund, you don't have to tax that interest. You don't have to tax that interest because that was final. That was done. There's nothing much you need to do to it. That should bring to an end that presentation on conducting due diligence on money market funds. And it is always a pleasure contributing to financial literacy so that we have more and more financially included. This is my operating principle. And it would be interesting if you have a question, then in the comment section, I will be glad to answer the question that you have. To just put it there and then I'll be able to respond. Thank you. This is Wakamiro, and let's keep here for more. We have more valuable content coming up for you so that we can get a better financially together. Thank you, and that should be it.